Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, first of all, guys, happy Wednesday morning. I hope you guys have a great day today. Still some super crazy things going on with midterms. It's still not over, guys. Russia's bombing Poland. Like, what's going on? You know, so many wild things in the world right now. But today, what we're going to do is focus on real estate. So, regardless, guys, I really hope you guys enjoy this video today. The data is in, and what was once unthinkable is now starting to become a reality for many investors across the nation. Contrary to the last Great Recession, where rent actually went up as a result of less people purchasing. But today, we have a housing market recession. People no longer want to purchase or rent, which in turn is causing rent prices to absolutely get crushed, especially in metro areas with overwhelming, unprecedented investor share. Because as rent declines, the cash flow and cap rates of these investors is going to turn to absolute garbage. Many will be forced to fire sell their properties just to survive our current incoming recession. Now, this is especially great news if you're a future home buyer or a current renter, because this means more than likely in the months and years to come, not only rent is going to go down, but also the purchase prices of homes will go down. Now, here's what I'm specifically saying. We're going to get an overwhelming amount of inventory from investors, not just new construction, but many investors. And just to understand how much inventory and how much fire selling is actually going to go on, we first need to understand exactly how much investor share had actually taken place this year. And not only that, guys, what I'm going to also pinpoint is how much rent growth has actually gone up since about 2020. So we're going to look at all of those things today. And let's start at the overwhelming amount of investor share in some of the top metro areas. And I'm talking, guys, in certain zip codes, well over 50% of investor share. Let's get started now. And first, what I want to do, guys, is really pinpoint what type of properties investors are purchasing. And now, obviously, we're talking about normal residential property. We are not talking about commercial multifamily. This is all normal housing. This could be primary residences. And really what I want to point out, guys, is the majority of investing in the housing sector is multifamily units, as you can see in this gray line here. So as of right now, you know, up to about Q1, it looks like, of 2022, we got investors purchasing 29% of multifamily units, which is really big, guys. But what has been really spiking over the last few, years is the amount of investor shares in single family residences. So you can see this orange line right here. 20% of the single family residences that were sold went to investors. So that's something new, guys. And obviously you can see it's been much lower than that, right around 15%. But prior to 2020, it was actually under 10%. So from 2010 to right now, the amount of investor share for single family residences went up double. So very interesting, guys. You can see condos and townhouses are about 16%. Still a lot of homes going to investors, but I really wanted just to paint the picture of exactly what type of properties they're buying. So most of them, again, are purchasing multifamily residences. And you guys may remember that, as far as mortgage fraud right now, where mortgage fraud is especially surging is with multifamily units. Essentially, investors are purchasing multifamily units as primary residences. That's called mortgage fraud. You can't do that. The reason is, if you do that, you essentially are lying to the lender, committing mortgage fraud in order to get more favorable financing terms. When you purchase a property as a primary residence, you get much better rates and loan terms versus if you purchase an investment property or non-owner occupied property. Now, let me show you guys a map of the metro areas with some of the highest investor share. So here's a really good investor market share indicator by Redfin. And what I've pulled up right now, guys, is I've pulled up Phoenix. Okay, so Phoenix, Arizona, because a lot of people are talking about Phoenix right now. because they should be talking about it. It's actually extremely overvalued. But I wanted to point out the amount of investor shares. Now, this is the top 5 zip codes in Phoenix. And as you can see, the number 1 zip code in Phoenix for investor share has 55% of investor ownership. That means more investors than actual owner occupied properties exist. So more non-owner versus owner occupied. That is insane to me. Followed by 50%, 50%, 49%, and 48%. So heavy investor share in Phoenix. So we're also going to take a look at San Jose, because San Jose also for some reason has overwhelming investor share. And we're going to look at some of those reasons here in a minute, which is essentially rent growth. But as you can see here, in San Jose is extremely overpriced. San Jose is one of the metro areas with year-over-year price decline already. But you can see here, their top zip code, 45% of homes went to investors. The number 2 was 34%, followed by 31, 31, and 29. So top zip code in San Jose, 45% share to investors. Now, obviously, I have to also include Las Vegas. And look at some of these numbers with Las Vegas. The number 1 zip code for Las Vegas had 54% of homes go to investors. That's astonishing to me. Followed by the number 2 zip code at 40%, 39, 37, and 37%. So in other words, guys, there's heavy investor share in Las Vegas. But the number 1 metro area that I was able to find with investor share goes to Atlanta, Georgia. Look at some of these percentages, guys. This is absolutely shocking. The number 1 zip code for Atlanta, Georgia, 71. Look at this, guys. 71%. Again, 71% of the homes went to investors. Is that not shocking? 71%, followed by the number 2 zip code at 63%, then 62, 62, and 61. So Atlanta, Georgia is by far as like the amount or percentage of investor share, Atlanta, Georgia is like the number 1 area where investors pretty much own almost all of the houses or a majority of the houses. To me, it's absolutely shocking. Now, what I want to do is talk about why so many of these current investors are purchasing in these areas, and it all has to do with rent growth. Take a look at how much the rent has gone up in each of these metro areas. So real quick, guys, I'm going to show you how to do this yourself if you want to look at your own metro area. I'm going to have this article linked in my description, but you have to do the drop down, and let's start with Phoenix. So I'm going to type in Phoenix right here and select it, okay? So we're going to take a look at exactly how much rent growth happened in Phoenix, basically starting in 2020. So I'm going to click right here, and you see that this map is really not engaging. When I click this, it doesn't tell me the rent. So what I have to do is actually hit this button right here, this download button, and then hit data. Okay, so it's essentially saying that, rent in March 31st of 2020 was $1,394. The reason that's important, you guys, is because we want to calculate how much rent has gone up in Phoenix, Arizona. So, that's the one way I'm going to do it. I'm going to speed past the other metro areas, but I wanted to show you. So essentially in Phoenix from 2020, the beginning of 2020, rents have gone up in a little over 2 years, 40%. Okay, so rent's gone up 40%. And again, you guys, the problem with that and the reason why that's not sustainable and the reason why rents are actually going down is not just inventory. Typically, the rent and mortgage and value and equity and all these other things, it needs to keep pace with wage growth, which is typically 4 to 5%. So the fact that rent went up 40% there in about 2.5 years is not sustainable. It should have gone up a maximum of about 13%. Instead, it went up 40%. And that's why you're starting to see rents go down and investors start to freak out. Let's look at the other metro areas. Okay, so here's San Jose. Currently, San Jose, the rent is $3,341. Since early 2021, about right here, you guys, rent has actually gone up 18% in San Jose. So San Jose went up the least amount. But again, you guys, when it's this high at $3,341, 18% is a lot. So San Jose is at 18%. Now, the current rent in Las Vegas is $1,832. If we go back to the beginning of 2020, where it was at about $1,371, essentially it's telling us that rent went up in Las Vegas in a little over 2 years, 33%. So 33% of rent increase in Las Vegas. That's why so many investors are actually purchasing in Las Vegas. They want to make a whole bunch of money in rent. Now, obviously, Atlanta, Georgia had an unprecedented amount of investor share. So if we look back at the beginning of 2020, rent was about $1,473. Fast forward to today, rent essentially went up in Atlanta, Georgia, you guys, 35%. So a 35% increase in rent in Atlanta, Georgia, essentially, again, and that's why we're seeing such heavy migration of investor share in these areas. When rent goes up that much, a whole bunch of investors get wind of that because they're in all of the data and they swarm out to those areas so they can start cash flowing. But again, you guys, now that rent's going down, that's not going to work out too well for them. Let's go on to the next segment of this video right now, which is rent decline. So we're going to really dig in now to actual rent decline, which again, is not normal when typically when people can't purchase, rent actually goes up unless we have a situation like we have now, a housing market recession, and ain't no one want to deal with housing, not renting, not even owning. A lot of people are actually moving in with family. Take a look. Now, I'm going to briefly read this article from Zillow, and you guys know that Zillow's been extremely behind the ball on this. I read a whole bunch of reports that actually say rent is going down more than this, but the fact that it's already hit Zillow is actually a good sign because Zillow takes more time to actually catch up. But let's read this. Asking rents across the U.S. as measured by smooth, non-seasonal adjusted Zillow observed rent index finally ended a non-stop growth streak in October, falling 0.1% month over month and marking the first monthly decline in 2 years. So it's not a huge decline, but the fact that we have a nation average rent decline of 0.1% is a good sign. And again, you guys, I know for sure, okay, I know that 0.1%, that's not enough, right? That's not enough. But again, we need to see the trends go the opposite direction instead of up. So this is a great sign of things to come. And you guys, again, we don't even have a confirmed recession. We still are battling inflation. The Federal Reserve is still doing overwhelming quantitative tightening. Unemployment and layoffs hasn't even spiraled out of control yet. We don't even have hyper supply. We don't even have a foreclosure wave. So again, imagine for a second what happens when those things start to fall in place. These investors are going to panic even more. Take a look. And again, you guys, the reason that is when their cap rates go down, say an investor is making a 4% cap rate, why would they want to take all of this liability and all these problems when they can go buy a treasury bill for over 4%? It doesn't make sense because again, rent is plummeting. So take a look at Phoenix. So Phoenix right now, month over month is down 0.53%. Okay. So again, you guys, it's a start. So Phoenix is starting to go down 0.53%. Now here's San Jose. Again, super heavy investor demand. San Jose is down for rent month over month 0.96%. That is a great sign as well. Now the number one metro area with rent decline right now is Las Vegas at 1.81%. So Las Vegas rent went down almost 2% month over month. A 2% drop in rent is a catastrophe for many of these new and recent investors. Now, rounding us out is Atlanta, Georgia. Atlanta, Georgia is only dropping, and it's still a good thing, but it's dropped 0.26%. So Atlanta, Georgia dropped 0.25% month over month. Again, you guys, I suspect that's going to speed up even more. So this is going to spiral out of control. We already know this. As the cap rates get destroyed, these investors will have to sell. But here's the thing, you guys, all of the data that I just showed you as far as how much investors share, that is all recent data over 2022 and 2021. What I really want to show you is how much total housing that investors actually own. And here's the thing, on a nationwide average, as we looked, investors had about a 20% investor share. The reality is, guys, is after decades of investors purchasing homes, investors right now own a lot more than 20% of our total housing units. So I'm going to show you guys the recent US Census data to actually see how many houses right now are actually being rented out and how many houses right now are actually sitting vacant. And I think this information is going to blow your minds. Take a look. And once again, you guys, the reason why this information is so important is because I'm telling you that we're going to get an influx of inventory, a surge of inventory specifically from investors and non-occupied housing. Mark my words on that. Whereas last time it was more resale, but right now a lot of families are protected in their houses with low interest rates. So I believe the investors are going to take an absolute beating. Now look at this real quick, guys. So I want to point out, let's look at the green, everything highlighted in green right now, okay? Now this is as of the third quarter of 2022. This is the Census Bureau information. Now I'm not going to look at total housing units yet. Let's just look at occupied housing. So right now, as far as housing that is occupied, we have 128 million housing units. Okay, so right now we have 128 million housing units. But what I wanted to point out, guys, is over 33%. Okay, so over 33% of occupied housing units is being rented. So 43.5 million houses, as you can see right here. This is to the thousands of units. So 43.5 million houses right now are being rented, which essentially means 33% of occupied property is being rented. So all of the people that say we're a nation of renters, well, that's what it looks like to me. This is insane. But here's what's even crazier. Look at the yellow. Let's go over the yellow now. Now the total amount of housing units far exceeds 128 million. The total amount of housing units is 143 million housing units. But here's the astonishing thing. Of that amount, 15.3 million homes right now are vacant. Again, 15.3 million homes are vacant, of which 11.7 remain vacant year round. Astonishing. Now, properties up for rent, and this is really what I want to dig into as well. Currently, there is 2.8 million homes right now, 2.8 million homes that are sitting vacant trying to be rented. Now, again, you guys, that's especially important because that means there's 2.8 million homes that are more than likely sitting and are not going to be able to get rented out for what the original investors thought they could make for those houses. So that 2.8 million inventory is what is the most at danger of being fire sold for those investors. But here's an astonishing thing. When we add the total amount of vacant properties to the total amount of rental properties, we have over 58 million total housing units that are either vacant or being rented, which means if we had just 2%, just 2% of that inventory sold, we would have more than double our inventory right now, which would create a hyper inventory event. So, in other words, if there's a bloodbath in the rental market, we are going to see things that we are not prepared for, that we've never seen before. So mark my words. And again, you guys, that's going to predominantly happen in those metro areas with the highest investor demand, where rent is going down the fastest. Now, here's the thing. For all of these things that I'm saying, I'm going to take it up a notch. So anyone that's been following me knows that I really love my housing market updates, and I've been keeping the viewers stuck in a very small box of Kingwood. Basically, the Kingwood area, Kingwood's a small area, but the Kingwood and the surrounding areas. So I'm going to actually access that local housing market, and I'm going to try to show you guys what's happening in the local market that we've been tracking on this channel for the last 7 months. Let's see how many homes are being rented, and let's see if the top deals in the market are from vacant properties, because investors need to sell quickly. Let's take a look. All right, so first what I want to show you guys, here's Kingwood right here. Now this is the active listings. So right now there's 93 active listings in Kingwood for sale. Now let's see how many rental listings there are. So to me, this is super crazy. There's actually 47 listings for rentals right now, as you can see that I highlighted. So 93 homes are trying to be sold, but also 47 houses are to be rented and listed to be rented. That's a huge number to me, guys, but take a look at this. Now, here's what's really mind-blowing. So what I have done here, guys, is I have put all of the active listings. You can see 93 active listings. I've categorized this list by the cheapest price per square foot. So these are the top 9 houses in Kingwood that are selling for the cheapest amount of money per square foot. And I wanted to note that I highlighted of the 9 properties, all of the properties that are vacant. So in other words, you guys, 6 of the 9 houses that are the best priced as far as price per square foot are actually vacant. So again, this is showing me that the best deals right now in my local housing market, the case study in Kingwood, the best deals right now are more than likely all coming from investors. I'm sorry, not all, but the majority of the best deals, the majority of the fire sold properties, the properties that are selling for under market right now in my case study area of Kingwood are mostly vacant houses. Astonishing. And again, you guys, 93 properties sold and 47 to be rented. That's a lot of properties to rent versus sell, in my opinion. So in conclusion, there's a few points that I want to hone in on after reviewing this data. Now, the number one thing is that I really want you guys to understand is all we need is 2% of the vacant properties or rental properties to be sold or listed in order to get more than double our inventory, which would create a hyper inventory problem, which is actually good if you're someone like me that's on the sidelines waiting for the deal of my lifetime. So that's the number one. The second thing that I really want to point out is we have an unprecedented amount of investor share. Super bad in specific metro areas that had super high rent growth as a result, more than likely, of migration for employment. But again, you guys, unprecedented amount of investor share. And again, remember, Atlanta, Georgia, some zip codes, 71% of the homes went to investors. Shocking, right? Unprecedented. Now, the third thing is, it is a fact, rent on average, and only a little bit, it's only starting, is actually going down across the nation. And in turn, what that will do, depending on the metro area, it is going to destroy the cap rates to these investors, forcing many investors to have to fire sell their properties. And I use the word fire sell because, again, they're essentially a distressed seller selling in a distressed housing market. In order to sell something in a distressed housing market, you have to sell it typically for under market value. And the more homes that are listed and sold for under market value, the better it is in whole for the housing market, because those comps or sold data is going to start rubbing off on other resale property. Now, the fourth and last thing, guys, that I want to point out is, and I'm specifically saying that we will have a surge, a massive surge of inventory from investors and from non-occupied properties. So it's going to be really important, if you're trying to find the deal of your lifetime, to study areas with heavy investor share where rent is plummeting, similar to Las Vegas. Now, I didn't cover some places in Texas. Austin obviously would be on that list, but I wanted to stay out of Texas just to show you guys I can cover more areas. But regardless, you guys, do me a favor, and I save this to the end. Remember, I'm not a financial advisor, even if I want to be, even though my bio is as a realtor, loan officer, and instructor in all things real estate. But this is my personal YouTube channel where I get to be outworked. I get to be a frustrated renter, a concerned father, a husband that doesn't do the dishes, okay? So for those things, you guys, please, except for the dishes things, I need to step up on that. But like this video, you guys, shoot me a comment below and subscribe if you haven't already. And I wish you guys a happy Wednesday. If you're out there investing in real estate, you know I wish you luck, and I hope you win.